It's Monday, and that means it's time for Gold Game Film with Frank Holmes, who joins me now on the line. Frank, good to be back with you.
Good to see you. I'm happy you got back from sunny Cayman safe.
Yes, Frank, Cayman was fantastic. Now, let's look at the gold market. Last week, we didn't get a chance to speak, but gold reversed some losses thanks to monetary policy easing coming out of Europe and, surprisingly, China. But do you think that the traction the bulls gained is enough to push the metal higher as we close off the year? We even saw one bank, Standard Chartered, raising their forecasts.
Well, I think it's important when Standard Chartered Bank came out and made announcements that were forecasting for gold to fall to 1160 range, and now they're ratcheting it back up to the 1250 range. Standard Chartered Bank does gold loans. Some of the other bears are not in the gold business directly by making loans against production. So I think they're an interesting indicator. This probably has much more grips to the industry itself.
So the 1180 mark really seems to be forming a base here for gold. Frank, do you think this is the end of the correction?
Well, usually we get a big spike in September, a correction, and then a rally going into the Chinese New Year. So the end of January, beginning of February. So we could have this sort of correction behind us. But what's really important is to look at the 10-year government bond and the 5-year government bond. When we go back and look at September 2011, when gold peaked at 1900, the 10-year government U.S. bond was paying -2%, -2% for you to buy one of those bonds. Today, it's plus 50 basis points. So as real rates have risen, so has the price of gold declined. Now, the 5-year government note this time last year had a positive rate of return. It's now negative. So I think that we could see a bottom taking place because the 5-year government bond is negative.
All right, Frank, let's get to opportunities and threats now in the gold market. And let's start with that news item that emerged last week. The Dutch following in the footsteps of Germany, and they want their gold back. The Dutch central bank ships 122 tons of gold back home from New York City to Amsterdam. They increased their home reserves to 31%, up from 11%. Frank, do you think this is a trend that we will continue to see more of countries wanting their gold back?
In my opinion, I believe this will continue because of the FATCA rules, the basic rules the U.S. has put around the world on what they deem as money not being declared properly and the amount of bureaucracy associated with it. As that was being pushed upon the world, you started seeing countries saying, let me get some of my gold back in our own jurisdiction. And it's become a political, a real serious issue when you take a look at Switzerland. So I think it's an event around the world that countries want to have a higher percentage of gold in their own central banks.
All right, Frank, we're going to mix up opportunities and threats now. And here's one weakness for the gold market. Hedge funds extending their fastest exit from gold this year. You note in your morning commentary that they cut bullish gold wagers for a third week. Holdings tumbled 49% over 3 weeks. That's the most since December. Let's talk about that news item, Frank.
Well, there's no doubt that the gold is being redeemed out of the ETFs, and we see it first being played out in the futures market, knocking the price of gold down, and then all of a sudden gold coming out. But what's really positive is that the platinum metals, the PGMs, the palladium, the platinum, and silver, the supplies from the ETFs are still rising. They haven't been declining, but they've been declining in price and sympathy with gold, but the overall inventory is rising. So I think that's very positive, and it's not so much a threat, and probably something will happen here. Now, you know, we've always advocated a 10% weighting in gold and gold stocks, or 5% bullion, 5% in gold stocks, and rebalance each year. So right now we had this great spread between the S&P and gold stocks. So they're probably in bullion, a time to rebalance to have that 10% weighting.
Well, I guess another weakness that could be seen as an opportunity, Frank, is news that the U.S. Geological Survey announced that gold production by U.S. mines in August had decreased by 11% from a year earlier. Now, could this be an opportunity since we know if production is down, could that support gold prices? Is 11% a significant enough of a number?
Well, it's not yet, but it's a trend, Danielle, that's in motion, and it'll probably get more traction in a year from now. We'll look back and say, wow, we are seeing a big contraction in supply coming from new operations are being delayed or derailed, and the existing supply is not being able to deliver what was expected.
Well, how's this for percentage, Frank? 257%. That's the increase that U.S. silver coin sales could see. The U.S. Mint has sold well over 2 million ounces of silver coins so far in November. You note that if this pace continues, total sales for the month could be well over 4 million, hence the 257% up from the year prior. Obviously, a very bullish news item here, Frank.
I think it's the best Hanukkah gift and best Christmas gift is to go and buy silver coins and give them out to children and grandchildren. They'll hold on to them for the rest of their life. And I think the decline in the price of silver, interesting enough, huge buying. So any big downdraft in gold or silver, we see it being picked up, in particular in North America, silver.
All right, Frank, let's wrap all this up with your gold touchdown pass of the week. We have GDP data from the US coming out this week. We also have your favorite CPI flash estimates coming out of Europe. What will you be eyeing, Frank?
Well, GDP is always looking out the rearview mirror, so it validates a trend, but it's really not as critical as looking at PMIs. We're going to get some of those smaller PMIs coming out, like Chicago, which is the heartland of America's manufacturing. I think they're more important indicators of economic activity that we should be looking at this week. But there's nothing that is huge that's out there that can have a huge shift, I think, in interest rates. But following what's taking place in China, dropping interest rates, now that is significant. This is the first big reversal.
All right, Frank, thanks so much. That's all the time we have today. We'll see you next week.
Yes, and happy shopping for great silver and gold coins.
And thanks for watching this edition of Gold Game Film with U.S. Global Investors Frank Holmes. If you have any comments or questions, please email us at newsfeedback@kitco.com. Happy Monday.